Hello again. So I thought I'd run through the process of how I arrive at these support and resistance lines and the arcs that go onto the charts for precious metals and other charts that I do. I've been asked a few times, you know, how it works and how this sort of technical analysis is done. So I'll try and sort of give you an idea how I do it, and everybody has a different approach and a different technique, but there are some common themes, and just so that you know what's going on in my mind whilst I'm doing this, I thought I'd try and explain it for you. So what we've got here is the gold chart, and I think those of you who are sort of familiar with technical analysis will pretty much understand everything that's on there, but I'm aware that lots of you aren't, and you might be investing in precious metals or the markets, miners, gold, silver miners, uranium miners, whatever it is. And I post these charts, and you perhaps scratch your head a little bit, sort of wondering what it all means. So I'll try and clarify it a bit for you if I can. So yes, this is the gold chart, and what you can see there is the horizontal lines, which you see associated with the colours, the sort of red band, the green band, and the sort of orange bands that are running across the screen. They're associated with Fibonacci retracement levels. I'll explain that a bit more in a moment. The bottom black line that's curving from the bottom left to the top right is the base of a larger arc which I've drawn. And if you look at the more recent sort of price of gold, you can see that I've drawn, well, three parallel lines there running sort of generally in a downwards direction. And what that is it's a chart that I first drew back in August. Back then it was more of a theory than anything else, and I've been developing it ever since, along with plenty of other technical analysts who are tracking the same developing pattern. And this is a descending channel at the moment. It may end up being a pennant of some sort, more of a sort of triangular formation, but we'll see how that develops with time. So I'll move on to a blank chart. So this is TradingView's website, which I use a lot. And when you create a chart on TradingView, or at least the way I've got it set up, it saves the chart for you. So every time I open a gold chart, it gives me this pattern because it saves it. But what I want to do is show you a blank chart. So I'm going to go to goldprice.org, which always starts up with a blank chart for the price of gold, or whatever it is you're looking at, which is quite good when you want a blank chart. So if I go back and show the big picture, you can see why, I think fairly clearly visually, why an arc formation makes sense here. And it makes sense now, but of course when I started drawing the arc on my charts, this whole right hand side didn't exist. I'd already spotted that arcs were quite common during basing formations, particularly basing formations that take years to build out, and this is sort of 10 years, of course. So when we'd had the left hand side of this arc, I started posting, not on here but on a gold website, I started posting this sort of pattern. And at the time, I think a lot of people were very skeptical because the right hand side, as I say, didn't exist. All we had was the left hand side of my potential arc formation. Now you'll notice here that I've not got the log chart selected. It's just on a linear chart where the price goes up at regular intervals, 200, 400, 600, 800. But because the price of gold is over time actually moving in a logarithmic fashion because of the way our monetary base is being increased logarithmically, you'll find that a lot of the technical chart analysis works better on a long time scale anyway, on a log chart. So if I switch it to a log chart, it makes a lot of the trading patterns fit better. So this arc fits much better on a log chart. You can see that the touches on the right hand side fit more appropriately. This recent pullback looks as though it's going to be testing the sort of monthly breakout levels, which were sort of anywhere between around about 1800 and perhaps 1810, 1820, that sort of thing. If it tests the arc again, then price will be coming back to somewhere around $1,700, that sort of thing. I'll just switch back to the linear chart. I mean, you can do it on a linear scale, but it kind of fits. I do prefer the log chart. It's cleaner over a period of time. What it also shows is that this whole pattern is kind of it's almost like a flagpole pattern. In fact, there is a flag in there as well. So if I just, and this is where support and resistance lines come in. When you look at a chart, you can spot that there's certainly with this gold chart, you can spot that there's a resistance line there. Maybe I find it easier to spot these things because I'm looking at statistics and numbers all the time in my day job, and in weather forecasting, I don't know, but you can see that there's a sort of a flag formation in here, or a pennant. Actually, it's a pennant formation, and I've posted this many times, and these pennant formations and cup formations are visible on all time scales, smaller time scales, larger time scales. They play out, but sort of traditional wisdom, technical chart analysis tells you that the height of the flagpole is added to the breakout point to get your target. Well, the bottom is $250 and the top is nearly $2,000, so you're talking about at least $1,700. The breakout occurred around about $1,250, something like that. So if you add $1,700 to that, you're getting around about $3,000. So the target for this particular pattern is around about $3,000. Another target comes from the depth of the bowl, and the depth of the bowl is, which we call the bottom of the bowl somewhere around about $1,000, just for a round number. I know it isn't, but I'm just making the maths easy. And the top of the bowl is somewhere around $1,800. So that's $800 onto the breakout. Well, the breakout being at $1,800, that gives you $2,600. So I'm looking at that area between $2,500 and $3,000 as a target for this move. There are some question marks about when we reach that target and whether it's reached very quickly after this pullback, or whether it takes maybe 12 to 18 months to reach those levels, because we have a cyclical low due in around about 2023. Another tool on here is time cycles. I always forget where they are on these. Here we are, time cycles. So the 8-year cycle low, and again, you could place it around about 1999 or somewhere in sort of 2000, 2001, but it's an 8-year cycle. And so it's something like that, with a low here in 2008, a low somewhere here around about 2016. And the next one comes in 2023, if I position this more accurately, 2023, early 2024. So we've got a period of time where we can continue the upwards trend, but this is going to be, I suspect, a very right translated cycle like it was in 2008, dropped very suddenly into the cyclical low. So being a strong bull market, I'm expecting much the same. So we've got time into 2022 before we start to see a drop into this low, but there's nothing that says it can't start dropping sooner than that. So next year, after a rapid rise that I'm expecting, I'm going to start looking more in detail at how we start pulling back into this 8-year cycle low, and a lot of it will depend on just how far and how fast we go after this this ongoing pullback. What else can I say? Oh, Fibonacci. So Fibonacci levels work like this, and I'm going to zoom in now to the 1-year time frame. Actually, tell you what, I'll zoom out. I'll get rid of the arc because it's going to confuse things. get rid of the cycles, and zoom back into the 1 year time frame. There we go. And so you can see the recent correction on here, and it's the move really started, the sudden sort of up move, you could say, started around about the March correction. It was moving up steadily from late last year, but we saw this deep correction into the March lows, and then this sort of almost, well, sort of exponential rise towards the top, well above $2,050. So Fibonacci works like this. If I just select the Fibonacci retracement, you start the retracement level at the low point and you end it at the high point, like that. So Fibonacci numbers, these will work in different places on the gold and silver charts and commodities charts, other charts as well, and you just have to play around and see how price reaction sort of interacts best with the Fibonacci levels. But you can see here that price retraced and bounced many times off the 23.6% retracement level. So 23.6% of the rally was wiped out when it touched this line. And if we go down to the 50% level, then obviously 50% of the rally is wiped out. So the move from 1450 to 2050 at $600, well, if you lose $300, it takes you down to 1765. So that's half of your rally wiped out. And you can also see that during this period here from, well, actually back here in March, the price bounced off the 0.618 retracement level from the top, and it also bounced around between the two Fibonacci levels here, which is kind of validating their relevance. Sliced through the 0.382, but there was a candle, the top of a candle and the bottom of a candle, giving some relevance to this Fibonacci level. And then, as I say, went on to the top. So in terms of the retracement that we're going through at the moment, if you draw in a resistance line, the software is going to catch up. So I'll go again. There we go. So there's a nice resistance line in here, which I've had drawn on the charts for, well, since August now. And you can see it's incredible, isn't it, how the price just touched the resistance line there. And we kind of, well, we knew it was going to do that. The technical analysis told us that price was going to touch that line and then continue downwards. Why? Because the intermediate cycle low isn't in yet, and you just have to look at Grady and Norvast on Twitter to kind of, follow the cycles experts and follow their thinking behind the intermediate cycle low. And they're very strongly the belief that the intermediate cycle low isn't in yet, which means that hitting that resistance line is going to act as a turning point, and that's exactly what's happened. And it's amazing that that sort of coincided with Donald Trump calling an end to the stimulus talks. Chicken and egg situation, isn't it? Which is controlling which? Is it the technical analysis that knows the headline is going to come, or I don't know? Are these fundamental headlines released to tie in with what we already know as a technical resistance level? I've got absolutely no idea. You tell me. But it fascinates me. At the moment, this is playing out as something of a pennant, like that. It could, if price falls lower and then bounces back up again, it could redefine this lower support line. We've only really had one touch, or if you place it there, two touches on the lower support line. So for the time being, that's probably the preferred placing, or something like that anyway, which ultimately gives us if you extend the two lines far enough, they're going to meet, of course, but price, in my view, isn't going to get that far before it breaks out. The elections are taking place, of course, in the US. Let's pull this a bit further across. the US elections in early November, so around here. So therefore, I would expect the retracement to come beyond the 382, sort of testing the 1800 area, and we could get a spike low down towards 1760 at the 50% retracement. If we get a spike low and what I would term as a false breakout, it could look something like this, and this is just supposition, but further downwards movement, bouncing off that Fibonacci retracement, and then back up. I don't know, something like that maybe, and then some kind of capitulation low, which would mark the intermediate cycle low, and then kaboom. All of this is just me thinking out loud. I'm not saying this is exactly what's going to happen, but it's something, the type of thing that's happened many times before, and I've seen it over the years. It'll be, of course, driven by probably the US dollar, and the dollar finding a cyclical high, perhaps somewhere around the 96 area, but it could spike higher, whilst gold spikes lower. But I suspect some kind of headline over the next couple of weeks, if something's announced regarding the stimulus before we get down here, then of course another scenario is that we just, I don't know, maybe get to here and accelerate upwards because of whatever happens to be announced. But the thing to watch in all of this is the upper resistance line. It's when that is breached to the upside that I think we can be more confident, or very confident, that the intermediate cycle low is in. It could well take a few more weeks, right up until the election period. Who knows what Donald Trump is going to say over the next few days and weeks. He may be wanting to lift the stock markets, do something dramatic, or announce something dramatic in terms of stimulus that lifts the stock markets and sends them into a huge rally before before the election day. I don't know. You tell me. I guess who's good of mine, but that's how I see the technical analysis, and hopefully gives you a bit of an idea of how I'm set about constructing the charts. So that's it for now, and more later. Feel free to comment, and I'll cover perhaps some individual miners and start picking some of the gold and silver miners and the resource companies that are doing really well or likely to do very well over the coming weeks. Thanks for listening.